Welcome to MarketTamer.com. It is June the 2nd, 2009. We're looking at the S&P 500 after the market closed. Market was reasonably flat on the day, up just 1.87 points. The Dow Jones was also fairly flat, but it ran into its 200-day moving average. We've seen the other two indexes pierce above that level, so we will not be surprised to see that break. But given how extended the indexes are, and especially if we take a look at the NASDAQ, we can see how it's moved above its Bollinger Band for 2 days in a row. It's well above its 5-day moving average. We see the extension above these typically constraining levels, and as a result, it would not surprise us to see the markets pull back in the next day or so. Those of you that are day traders can look for that inflection point as an opportunity to jump on board some long puts. It will very much be a quick in and out trade, we expect, until the market starts to show some considerable sign of weakness. Again, nothing technically signifying that. The fact that the NASDAQ has broken above the 200-day first, followed by the S&P 500, leads us to believe that there's a pretty good chance that the Dow Jones will follow. Why is that? Well, the S&P 500 is really the important index. It's the one that comprises the 500 largest stocks in the United States. Whereas if we look to the Dow Jones, it's just a composite of 30 stocks. The NASDAQ, of course, is more technology weighted. But today what we want to focus on is FLOR, Fluor Corporation. And the reason we want to discuss this is it's going to comprise an example of an adjustment in tonight's class. So as I speak, it's about 6:15 p.m. Eastern Time. We'll be holding a class in 45 minutes, and we've already sent out an email actually to everybody notifying our members of that class. And what we're going to discuss is how to adjust a trade that has gone wrong. The trade we looked at initially was a bear call on Fluor Corporation. The expectation was that by June's expiration, the stock would remain below the $50 level. We updated the trade yesterday to members, and the reason we updated it was we were seeing a piercing of our trigger level, which was the short call strike price right around 50. Obviously, there's always a reasonable chance that just because a stock goes up on any given day, it can come right back down by expiration. But we stick with our trigger points, and our trigger point was to make an adjustment once that strike level had been pierced. The reason we do so is that if there's a continuation above that short call strike level of any significant degree, it can become increasingly hard to make adjustments. So we'll talk about the adjustment in that class to a greater extent, but I wanted to flag that to you. And essentially the thesis behind the adjustment is going to be that even though the stock has rallied very considerably here in the last couple of days, it's up about 10% or so from the $45, $46 area from last week up through to about $50 or so early this week. The probability of a continuation of that magnitude over similar time frames is darn near zero. And what I mean by that is a stock can certainly go up 10% one day, it can go up 10% the next day, and maybe even the day after. And stock can go up 10% in a week or maybe even a month. But what is the probability a stock will go up 10% this month, next month, the month after that, and continue like that forevermore? And the answer is zero. And so by employing an appropriate adjustment technique, we can take advantage of that expectation, and we can simply remain patient and disciplined. There's no need ever to panic on a trade. We can just invoke our contingency exit plan, move to our adjustment process, and take advantage of the market stagnation or inflection to the downside when it occurs, or in the case of our adjustment, even if the stock continues higher, we'll still be fine. So we'll cover that in more detail in the class, but for now, I will wish you a wonderful evening. As always, if you have any questions, feel free to come on into classes, ask them. If you are a member, you're welcome to jump into the forums, and we'll be answering questions there also. We look forward to seeing you in about 40 minutes or so. Look forward to that. Bye-bye.